back. We are here doing a 3-part episode talking about the current market conditions with regards to the interest rates being higher than they have been in recent years. And Bill has shared some examples and opportunities for buyers to consider with regards to their loan product that might be more advantageous than just a typical 30-year fixed mortgage. So we have discussed an adjustable rate mortgage. We are going to be discussing today temporary buy downs, and then lastly we'll discuss an exclusive product to PrimeLending, which is a rate redo. So Bill, can you just walk the buyers through what is the difference between buying down points versus a temporary buy down?
Right. The first thing is a permanent buy down is what most people think of when you start talking about buy downs. And a permanent buy down basically is when you pay discount points, which is a percentage of the loan amount. 1% equals 1% of the loan amount. So 1 point would be $4,000 on a $400,000 loan. You pay that amount at closing to buy down the rate, say 1/4%, okay, from the market. The thing is, that's for the lifetime of the loan, and if you sell the house in 10 years, then you've kind of thrown some money away.
Right.
So we're not talking about those, because what we're talking about today is what's called a temporary buy down, and they're labeled a lot of different ways. There's a 3-2-1, a 2-1, a 1-1, and each one has little differences as far as how they work, but in general the most popular right now is the 2-1 buy down.
So basically that 2-1 buy down, you're lowering the interest rate in what, the first 2 years?
Correct.
Walk us through that, please.
So if the mortgage rate, let's say we're 7% today, a 2-1 buy down would buy the rate down to 5% for the first year of the loan. So the interest rate and the lower payment is calculated at 5%. Year 2, that rate is 1% below the market rate. And years 3 through 30, the rate's market rate.
Okay. So basically the 2-1 buy down, 3-2, whichever option they go with, it's prepaying your interest rate and part of your monthly mortgage payment in the first couple of years of your loan. So, and that's with the idea that perhaps the interest rates would go down within the first couple of years and you would be able to refinance into a lower interest rate.
Yeah. And what's key about it is that what you have to know in advance of doing one of these is the seller has to pay for it. I mean, the lender can, but it doesn't make sense for the lender to pay because they're just going to have to charge a higher rate. But the seller has to pay for this. And so you need to either write it in your offer when you're writing your offer so that that can be included in the net when he's figuring his net.
Right. And so sellers are actually open to doing this right now because in the current market, days on the market are ticking upwards to a couple of months that their houses are sitting. Their sales price versus the list price is dwindling a bit. So they are, rather than taking a sales price reduction, they are selling it at the list price, but offering that credit to the buyer. So the seller nets the same amount. So it's actually a listing strategy that I use that helps my sellers be more competitive in the market against other houses that are for sale. So in that negotiating, whenever your buyer's agent is submitting an offer, that's part of what kind of goes into play in writing a competitive offer on a home.
Right. Yeah, and you know, it's just like if you were looking at homes and you had one that had a buy down offered on it, one versus doesn't have a buy down offer on it. I think as a buyer, I'd be like, I want the one with the buy down.
Right, if it's apples to apples.
It helps me move my moving expense cost and my furniture and all that stuff.
Absolutely.
You know, so anyway, I think it's sort of a win-win. And when we talk about the rate redo, it's really going to make a win-win. But you know, just thinking about that, if you have any questions with regards to the buy downs, please give me a call. I'll be more than happy to explain to you in detail what are all the terms and the things you should know about them.
And if you like the content that we're discussing and want to follow along, we invite you to like and subscribe and follow, share. And if you have questions that you'd like us to address in future episodes, please write them into the comments and we would love to incorporate that.